The single most important thing about investing is being aligned with the market. And if the market is going up, whether that's the stock market or the bond market or the gold market or the currency market, you want to be aligned with that. And if those markets are falling, you want to be aligned with the falling. And this is the problem with big box advisors and independent financial advisors. They actually have no alignment necessarily with whether the market goes up or down. They just continue to tell their clients to just be aligned with a market going up, whether it is going up or not. And this just seems really ridiculous why you'd want to take the full hit of a market falling. Of course, we want the full hit of the market going up. But as we know, over the last 13 years, we've had two 50% falls in the market, one being a 58% fall in the market. And going with the trend, following, being aligned with the direction the market is going, is the single most important determining factor of whether you will grow your money or not. Hey everybody, this is RC Peck, and this is my weekend podcast. And what I want to talk with you about is really the flow of money and knowing where money is flowing. And the way we can tell where money is flowing is by really looking at the trend. And something happened interesting on December 18th of last year, a little over a month ago. A guy named Ben Bernanke, who was running the Fed, said, hey, we're going to cut the money printing by $10 billion a month and see what happens. Now, he didn't say, and see what happens. So his comments really didn't affect or change anything going into the end of the year. There were 12 calendar days left until the year ended, and those comments didn't really make a big shift or change on any of the asset classes. But come the first day of this year, lots of things started changing. And so what we're noticing is trends have very much changed because where money is flowing has very much changed. And what I want to talk to you about and show you in 3 price charts is how those changes have happened and where the money is now flowing. So the first price chart or screenshot I want to show you is comparing gold, U.S. bonds, and the S&P 500. Now, if you look at the screen, you can tell that gold from the beginning of the year, this is physical gold, not silver, not gold mining shares, but just actual gold, is up 5.25% from the beginning of the year. And then you have bonds, which are up about 1.25% percentage points since the beginning of the year. You compare all that with S&P 500, which is down almost 3% for the year. Not quite, but down almost 3%. But you can kind of see here with the black line being at zero, money's flowing back into the bond market. Prices are going up. Money is flowing into gold. Gold is going up. And money is flowing out of the S&P 500. So the question is, what happens to the stock market if Ben Bernanke, or now Janet Yellen, is going to cut back how much they're printing? It may be that bad news is actually bad news in 2014, which in 2013, bad news was good news and good news was good news and all news was good news because, hey, there's $1 trillion of money printing going on. Well, I think that's changed. Well, for sure, the money printing has changed. And this trend has changed with money flowing out of the S&P and it going into bonds and it going into gold. The second screen I want to show you is just major markets around the world. The U.S. stock market is the red line on the screen, and it has actually fallen the least. So still the U.S. stock market is still considered the safest stock market of all the stock markets on planet Earth. And then we go to Japan. Japan has fallen a little bit more than the U.S. stock market, about 1 percentage point more. But then Europe's fallen even more than the U.S., more than Japan. Europe's down about 4%. So those are 3 major stock markets. You got the U.S. stock market, the European stock market, and you have the Japanese stock market. And then in 4th place is emerging markets, which you can see is down over 8%. 8% since the beginning of the year. So clearly, money printing, or the cutting back of it, the emerging market areas of the world, which includes China still, Brazil, they're not liking this cutting back of money printing. So it's going to be very interesting to see what happens with the major stock market indices going forward into really the first quarter. And then the third screen I want to show you is just currencies. Where are people putting their money in currency terms? And if you look on the screen, you see the black horizontal line. There's only 2 lines above it. Here's the black horizontal line right there. there's only two lines above, and one is the yen, which the yen's almost up 3% for the year, which I have to say is pretty darn impressive considering that Shinzo Abe is wanting to print trillions of dollars of yen a year to really crush their currency. But, money is flowing back into the yen. Money is flowing into the US dollar. The US dollar is not quite up 0.5% for the year. But in relative terms, if you look, the euro is down for the year 0.5%. Below that is the Australian dollar, down 2.5%. This thing is just getting hit. But the Canadian dollar is absolutely getting killed. I mean, we are only not even 1 month into this year, and the Canadian dollar is down 4%. So the question is, what can you take from this? Follow the trend, follow the money, especially at the beginning of a new tax year, which is the beginning of a calendar year. Notice what is happening, what is shifting, what is changing, and what has shifted so far is the stock market is not the place to be. The bond market is doing well. The gold market is doing well. The precious metal mining market is up 15% for the year. The silver market is holding up well, and the yen and the dollar are holding up well. Watch when things change. Watch when directions change, because that will give you the hint of where you should have your money. I want to leave you with my final thought, which is really all things being equal, the simplest solution is usually the best solution. This was William Occam's idea, now called Occam's razor. And the thing that I really pound the drums on the most is to keep things simple. Simple is power. And one of the simplest things we can do is notice when trends change. Gold was hit very hard last year, down 28%, just the physical metal itself. Silver was down much harder. Precious metal mining stocks were down 55% last year, down a total of 70% from their peak in September of 2011. Notice when trends are changing, because that's the key that can really show you where to be putting your money. You guys have a great weekend, and I look forward to talking with you soon. Take care.